Yes, it's finally happening. After almost 2 years of price increases, prices are now on their way down. Depreciation rates are even at record levels, but there are big differences between the market segments. What is also interesting is that the wholesale prices decreased a lot more than the retail prices, and those are of course the prices that you and I are paying. In this video I will show you exactly what happened during the last 3 months in the used car market and where it could go next. Crucial information if you are buying or selling a car right now. We start with an overview of the wholesale prices. Over here we have in grey the seasonally adjusted price trend and in blue the non-adjusted version. Due to inflation, used car prices tend to trend up when you take a long-term perspective, but this all changed in the beginning of 2020. Prices dropped as there was a lot of uncertainty following the pandemic, but they quickly recovered and surged to historic heights. Demand increased as people didn't like to use public transport and disposable income rose. At the same time, new supply decreased following poor supply chain management and later the chip shortage. All of this resulted in a price increase of 47% during 2021. But as we discussed in the Q2 market update, things started to change in the beginning of 2022. The upward price trend ended and prices started to stabilize. We saw the first signs that depreciation was back and that it could be the market top. It turns out that this is indeed the case. Prices decreased significantly during the last 3 months. Depreciation rates are even at record heights. Now before we move on, we need to discuss some technical issues. You can see that compared to the beginning of the year, the adjusted version shows a much larger price decrease than the non-adjusted version. Yet, this is just the effect of the seasonal adjustment, as the spring price increase was lower than usual and also later. As you can see from the historical development, car prices typically go up during the spring. And this diversion leads to significant differences in the annualized price decrease. The adjusted index is down 14%, whereas this is only 7% for the non-adjusted version. This is of course just a technical issue, and you can see that the two indices converged during the last few weeks. But I think it is important to highlight what price decrease we talk about and how it is calculated. But now then, it is important to keep in mind that these are the wholesale prices and not the retail prices. Also they're on their way down, but the price decrease is much smaller than the price decrease in the wholesale prices. And this has something to do with stubborn car dealers. But before we dive into that, I would like to thank today's video sponsor, Surfshark VPN. Surfshark is an app and browser extension that lets you change your virtual location with the click of a button. So this means that when you access a website, it thinks that you are somewhere else than that you actually are. And this is a great feature for expats like myself. My accent reveals quite quickly that I'm Dutch, yet I'm currently living in Finland. And this comes with many perks like a freezing winter and basically no sunlight. Typical times where you would like to crawl up under a blanket and watch some Netflix. The great power of Surfshark is that it allows me to watch all my favorite Dutch movies and series from Finland. The only thing I need to do is open the app and switch my virtual location to the Netherlands. And just like that, the Dutch spoken content more than doubled. An additional benefit from turning on the VPN connection is that your data is protected. Not just any protection, but a military grade one. That's nice to know when you are transferring your down payment for a new car or perhaps even the full cash amount. Moreover, you're even protected if you do it at a car dealer. Surfshark allows you to install the app on an unlimited number of devices. And yes, this means that you can share one account with your family and friends. So why not give it a go? By using the link in the video description and the code Fourwheel, you get an 83% discount and 3 months for free. This is basically a risk-free deal. They offer a 30-day money-back guarantee. But now then, let's have a look at the retail and the wholesale prices. Over here we have the weekly wholesale and retail price index for 2021 and 2022. For cars that are 3 years old. Typically it is so that retail prices follow wholesale prices with a lag of approximately 6 weeks. When wholesale prices increased last year, retail followed. We can see that since the beginning of this year, both retail and wholesale prices are trending down and stabilized slightly around week 20. But then something interesting happened. Wholesale prices decreased at a rapid pace while retail prices decreased only marginally. So why are retail prices not dropping? According to Cox Automotive, there are 2 reasons for this. First, the wholesale prices tend to be more volatile than the retail prices due to the efficiency in that market. That makes sense. But I think that especially the second reason is interesting. They point out that retail prices decreased less due to the stubbornness of car dealers. Retail prices are based on the price that the dealer has to pay for that car plus a certain margin. And this means that inventory that was acquired during the last months was purchased at high prices. Dealers do simply not want to discount that old inventory and sell it with a loss. It's then also mainly the new inventory that was acquired at a lower cost that is selling right now. Now the expectancy is that dealers need to take their losses on the old inventory and that this will push retail prices down. No dealer wants to have stock sitting around for too long. Consequently, we can already see that the decrease accelerated during the recent weeks. Depending on the financial health of the dealer, this of course might cause some problems. Now one important thing to take into account is that the price decrease in the used car market is not equally distributed among the market segments. Over here we have the price development for 1 to 10-year-old vehicles, and this reveals that there were big differences in the beginning of the year. Especially young vehicles lost a lot of value while old ones remained stable. But all of this changed around week 20. Depreciation rates converged rapidly. And this means that the total value loss is fairly similar among the age group. It sits between 11 and 14%. Another way of looking at the market is by splitting it by the different car types. That reveals interesting differences and some of the consequences from the sharp increase in petrol prices. Over here we have the value development for the SUV, compact, pickup and mid-size segments. Each line shows the value development for a different year. For example, the yellow line shows the values for 2021, whereas the grey one shows the value development for 2022. You can also see a box that indicates when the gas prices saw large increases. It turns out that this was a key event for the prices. SUVs decreased significantly more than compact cars. We can see at the left top that SUVs lost around 13%, whereas compact cars only lost around 7%. The pickup and mid-size segment sit somewhere in the middle with 11%. So we saw now that used car prices are correcting, but is this a crash? Well, as always, I guess it depends on your definition of a crash. It would be quite tempting to label this as a crash and put it in the video thumbnail and title, but I think it is more of a correction than a crash. At least, with the current price decrease, I do not think that there are many people who suddenly experience significantly lower prices when they are shopping for a car. Hence I label it as a correction. But let's dive a little bit deeper into this correction and have a look at the demand and the supply situation. This in turn might help us to say something about the future prices and whether or not we are heading towards a crash. Let's start with the demand side and the current sales. Over here we have the retail used sales for 2019, 2021 and 2022. We can see that the sales pattern is somewhat similar to 2019, but that the values are a lot lower. There are no signs of an increasing momentum. Rather, it's easy to argue for a decrease in momentum. It starts to be more difficult to get credit. Looking at the credit availability, we can see that it peaked in the beginning of this year and now appears to be on its way down. Loan approval rates are falling, and this goes especially for the subprime and deep subprime consumers. At the same time, the down payment sizes are increasing and the loan durations are also decreasing. Naturally, credit is also a lot more expensive as interest rates are increasing. If we have a look at the supply side with the following graph, we can see that supply has been above 2021 levels since the beginning of this year. There came a little bit of air in the market. It then decreased and sits now 10% higher than last year. But it's expected to be subdued for quite some time. Commercial supply, for example, is way below normal levels. However, it turns out that the current demand and supply levels are fairly balanced. And we can see that in the day supply graph. The day supply shows the average days it takes to sell a car and is therefore a good indicator of the hotness of the market. Looking at the red line, so the one for 2022, we can see that the number was even above 2019 levels, and this could to some extent explain the large drop in the wholesale prices. Now, however, the number is 50 days or equal to 2019. In other words, supply and demand are relatively balanced in the used market. So what does this mean for the rest of the year? Will the price decrease accelerate and result in a crash, or will things stabilize from here onwards? When it comes to future prices, I like to think of it in terms of scenarios with probabilities attached to those scenarios. If you are a subscriber to the channel, you know that I usually follow this approach. When it comes to used car prices, I have presented the following two forecasts to you. The first one is the prediction from KPMG. They expected prices to come down between 20 and 30% during 2022. In other words, one could say that they are expecting a serious correction. The second forecast is the one from Cox Automotive. At the beginning of the year they forecasted a drop of 3% and they revised this during Q2 and upped it to 6%. Now they increased it even further to 14%. So as of now, their initial predicted drop of 3% seems to be way off. Now the two forecasts at the beginning of the year differed quite a lot from each other, 3% versus 20 to 30%, and also the underlying assumptions were very different. I shared with you in the used car market update videos that I thought that the 3 to 6% forecasts from Cox Automotive were the most likely one. In the end though, I think that we might end up somewhere in the middle of the two initial forecasts of Cox Automotive and KPMG, and that means a drop of roughly 16%. And like everything else in this video, this applies to the market for your everyday used cars. I'll make a separate video about the exotic car market. And with that we arrived at the end of this video. Now if you're interested to see a data-driven market analysis for a specific car, then I recommend that you head over to my channel. Over there you'll find custom market analysis for many Porsches and also for example for Ferraris. You can also let me know the name of the car for which you would like to see a video. Just comment the name of that car down below in the comment section, and if there are enough requests for a certain car, I will make a video about it. Thank you for watching, and I hope to see you next week for a new video.